So you've been, I would say, net constructive, right, in the midst of this crazy fall that we've had.
Well, net constructive because our belief is that we're not going to be heading into recession. That we are going to be looking for an economic slowdown, earnings slowdown, but not a recession on either side. We did, however, reduce our forward 12-month price target. We're now looking at 27.90 29.75 for the end of 2019. So bringing down the optimism. I call myself a bull, but with a lowercase b.
So do you need to start to see real improvements in global growth now, or can you wait?
Oh, I think we can wait, but I think the key is that this is simply going to be a slowdown because the bar has been set so high. You know, this time last year, expectations for earnings in the U.S. were a gain of 11.5%. Today, that's a doubling. So we're looking at something close to 23%. The street is looking for about 7.5% earnings growth in 2019, but that's down from 10% at the end of September. Our belief is we see something between 2 to 5%.
2 to 5.
What's interesting is that going back to 2000, analysts have been wrong 60% of the time looking at year-ahead earnings. They've been wrong by an average of 5.5 percentage points. So that could imply, but obviously not guarantee, that maybe we end up with only a 2% growth in earnings in 2019.
I mean, Kirk, factoring in all of this, the global growth story, the sort of new landscape and outlook, how do earnings look to you next year versus what the market is pricing in?
Well, I think what's happened is very logical. We're about a 15 PE. If you look at $170 on the S&P 500 next year, and you put a multiple on it, you know, we could go to a 16 multiple next year. So I think to the point, I think growth is clearly slowing, but I think the U.S. economy is still in pretty good shape.
Sam, in terms of the U.S. economy, small caps, the Russell 2000 yesterday, also the Dow Transports closed at fresh 2018 lows. What are they telling us, especially given the fact that they are so exposed to the U.S. economy?
Well, I think that they are telling us that they're worried, that investors would rather sell first and ask questions later. But if you look to the earnings growth expectations, while the S&P 500 is expected to show growth of only about 7.5% right now, small caps add 10 percentage points, and that's what you're looking at. So there's still much more upside potential for mid caps, for small caps, but I think investors are sort of playing scared right now, overdoing it in terms of adjusting downward their earnings estimates and going to react afterwards.